Okay, so good evening, everyone. I'm sure you can see my screen and I'm sure you can hear me clearly. So you are welcome to our class this evening. So we started last week looking at, on Saturday, we were looking at basis period, and we looked at, I told us that, okay, when it comes to basis period, we are going to be having 3 different periods. We are going to be having commencement of business, we are going to be having change of accounting date, and we are going to be having questions on cessation. How do you assess a company to tax? How do you compute the tax liability? Or how do you compute the assessable income or taxable income of a company or a taxpayer for all of these 3 periods? So for change commencement of business, I told us that Financial 2019 has really made life easy and simple for us in such a way that it has helped us so that we will not be doing those overlapping that we used to do before. And with commencement, there is no longer selection, because then before the introduction of Finance Act 2019, there is what we call selection, and the person that has the right of election was the taxpayer, but it has been cancelled. So we now look at okay, how do you determine the basis period and the year of assessment, which I told us that, okay, for commencement of business, it is always going to be, you can't see the screen. Do you mean you can't see the screen, or you can see the screen? For commencement of business, it is always going to be on preceding year basis. For commencement of business, it is going to be on preceding year basis. What is the meaning of preceding year basis? Preceding year basis means that, okay, my tax of last year, sorry, my assessable profit of the period of last year will be assessed to tax in this year. And also we try to look at questions on, okay, how is basis periods being determined? How did they determine basis period? How do you determine year of assessment? And we look at that one for different scenarios on commencement of business. Then we now move to change of accounting date. And when it comes to change of accounting date, I told us that there are some rules that we are supposed to apply. I hope you can see the screen now clearly. I told us that for change of accounting date, there are some rules that we need to apply. And that rule is very, very important for you to be able to make your decision and to be able to know if you are doing change of accounting date. And I told us that, oh, in a particular question, they are not going to be telling you that, oh, this question is the change of accounting date question. Look at this, that one that we tried last week of Olowele Komo. I told us that immediately you are seeing a change. Immediately you see a change in the year end. And the requirement is that for you to compute the assessable profit for relevant years of assessment. And I told us that you don't need any prophet to tell you that this is a change of accounting date question. 12th of December, look at this one, 12th of December 31, December 31, 2015, December 31, 2016. But you're supposed to see December 31, 2017, but you are seeing a different year end. When you are seeing this kind of question, please just know immediately that this is a question on change of accounting date. And I told us that there can be instances that they will give you a question that it has commencement, it has change of accounting date, and it also has cessation in it, the 3 loaded together. So we solved this question of Olowole Komo last week, Saturday, and we ended the class that, okay, we are going to continue with cessation of business. We are going to continue this evening with cessation of business. Please, a minute. I think I need to quickly look for that notes. on cessation of business. Please, a minute, please. So a lot of people have been coming to my DM, you know, they are missing up the change of accounting dates. Change of accounting dates, which I told them that, okay, what you need to know when it comes to change of accounting date has to be the rules. Follow the rules critically. A good understanding of the rule is going to help you to be able to attempt any change of accounting date questions. Because if you miss the solution to A, rule A, you have automatically missed the solution to the remaining part of the to the remaining rule E to A, B to F. So please take note of that. Don't try to miss any of this part of the rule. So don't try to miss any of this part of the rule. So we want to quickly look at, okay, what is the note on cessation of business? What is the rules, or what are the things that are necessary for us to know when a company is ceasing business in Nigeria? When a company is ceasing business in Nigeria. Where a company permanently ceases to carry on trade or business, or in the case of a company other than a Nigerian company, permanently ceases to carry on a trade or business in Nigeria in any accounting period, is accessible profit therefrom shall be the amount of the profit from the beginning of the accounting period to the date of cessation, and tax therefore thereof shall be payable within 6 months from the date of cessation. Arising from the above, a company that ceases business between January 1 and June 30 will file its returns and pay taxes in that year of cessation, while the company that ceases business between July 1 and December 31 will be expected to file returns and pay taxes on the following year. What is this place talking about? It's telling us, it's making us to know that, okay, when it comes to cessation of business, there may be instances that the year of assessment is going to be on actual year basis, and there may be instances that the year of assessment will be on preceding year basis. Imagine I'm using January to December. A company is using January to December, 1st of January to 31st of December as its year end. 1st of January to 31st of December as its year end. If that company should cease operation, maybe the company ceases operation like February. Don't forget that the 1st of January 2024 to 31st of December 2024 will be assessed to tax in 2025, making use of preceding year basis. But if that company should not go and cease operation like February, 6 months after February is going to be August. So if that kind of company should cease operation, then that means that it's paying that tax 6 months after February, is going to pay the tax in August, which means that, oh, the same year of basis period is the same year of your year of assessment. That is the meaning of actual year basis. That's the meaning of actual year basis. Also, if the company should cease operation between July to December, 6 months after July, that is January. So you are saying that, oh, it has already crossed to a different year. So that means that one is going to be on preceding year basis. But if you should cease operation between January to June, that one is going to be actual year basis. It depends on what is the basis period, or what is the accounting year end of the company. That is what is going to be determining all those ones for us. So let's quickly attempt this question on cessation of business. Let's quickly attempt this question on cessation of business. I hope this is big enough. I hope you can see it clearly. Monday Okon is the sole owner, Diamond Enterprise, and he has been in business of buying and selling of shekel for so many years. Due to government policy, which is against the selling of shekel, the business decided to shut down on 30/4/2024. The business has the following result for the past 4 years. We have year ended 30/9/2020. That year ended 30/9/2020 means that the company year end is 30th of September. That's what it means. The company's year end is 30th of September. So you saw year end 30/9/2020. Year ended 30/9/2021. Year ended 30/9/2022. Year ended 30/9/2023. And we have period 2. And I told us that anywhere you see period 2, take note. Either that month, that basis period, the number of months is not up to 12 months or is more than 12 months. Once you see period 2, it's not up to 12 months or is more than 12 months. So the requirement is for us to compute the accessible income for all the tax years. We should compute the accessible income for all the tax years. So then let us waste time on this. Let me quickly show us our Excel sheet that we are going to use to prepare this solution. So we'll just quickly run through it. We'll be jumping through the question. I'll be coming back to our Excel sheet as well. So let me expand it a little so that everyone can see it clearly, right? Thank you. So the name of the business is Diamond Enterprises. Take note, that is the first thing that you must write in any of your calculation questions in this level. FM, PM, tax, FR, PSAV. Please take note. It is very, very important. Diamond Enterprises. And they say we should compute the accessible income for all the tax years, for all relevant years of assessment. So our title of account is, account. Title of the subject, computation of accessible income for relevant years of assessment. For relevant years of assessment. Then I'm going to have my YOA, my year of assessment. Then another column for basis period. And another column for my accessible profit or accessible income. Accessible income. Please, Naira sign, very, very important. Naira sign, very, very important. Please, on no account should you forget your Naira sign. On no account should you forget your Naira sign. So this person comments is always making his year ended to 30/9/2020. So that means if the year ended is 30/9/2020, so that if I'm correct, the beginning should be from 1st of October 2019 to 30 September 2020. I hope I'm correct with this. So what is going to be the year of assessment? Making use of preceding year basis. What is going to be the year of assessment? Making use of preceding year basis. Don't worry, everybody will be muted today to avoid distractions. So the year of assessment making use of preceding year basis is going to be 2021. 2021. That is the year of assessment. 2021. That is going to be my year of assessment. 2021. So now, what is going to be the accessible income for 30/9/2020? That is going to be 400,000 naira. 400,000 naira. What do? We close this thing with 2 lines. We close it with 2 lines. The next year of assessment is going to be 2022 year of assessment. 2022 year of assessment. 2022 year of assessment. What is going to be the basis period? The date immediately after the end of 30th September 2020, which is going to be 1st of October 2020 to 30 September 2021. 500,000. 500,000. The next year of assessment is going to be 2023. And my basis period is going to be from 1st of October 2021 to 30th of September 2022. 30th of September 2022. And what is my accessible income? 450,000 naira. 450,000 naira. The next one is going to be 2024 YOA, preceding year basis. Basis period is 1st of October 2022 to 30th of September 2023. 30th of September 2023. And what is the accessible profit? 300,000. 300,000 naira. The last one now, which is the year of cessation. They said the company ceases operation 30th of April 2024. So that means it must have commenced another year from 1st of October 2023 to 30th of April 2024. 30th of April 2024. 6 months after 30th of April 2024 is going to give us the same year of 2024. The same year of 2024, because that is going to be April. Sorry, 6 months after April, that is going to be October. Please, October. That is going to be October. So that means the company is going to be assessed to tax in that same year that it ceases operation. And how much is the accessible income? 260,000 naira. 260,000 naira. That is all I can show us when it comes to cessation of business. Please, do you have any question? You can quickly raise up your hand, and I'll quickly attend to us. If you have any question, then please permit me. Let me look for. There's another question that I would like us to treat this evening. There's another question I would like us to treat this evening. So please, I hope you are still together. Okay, now let me quickly listen to your questions. I can't see people raising their hand. Do you have any question? Any question? Yep. Thank you, October. Okay, so you can ask your question. The first person, I can't see the. Okay, Mr. Lazarus. Mr. Lazarus.
Hello, sir.
Yes, boss.
Hello,
Yes,
sir.
boss.
Good
Good
evening,
evening,
sir.
sir.
Sorry, my question is under the cessation date when we are having 6 months left. Can you hear
Go
me,
on, go
sir?
on, go on.
Okay. Under the cessation date, under the basis period year of 2025, sir, the month is not up to it's not up to 12 calendar months. Since it is 6 months, are we not expected to divide it by, say, 6 divided by 12
No,
and take
no,
out
no,
the profit?
no, 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 no. They gave you the figure, period 2. You don't need to divide anything, sir. So that means from 1st of October 2023 to 30th of April 2024, that is the profit that the business generated. Are you clear,
Sorry,
sir?
sir. Can you hear me, sir?
I can hear you. Go on.
Is it based on the new law? Because when I was in school, there are if the month is not up to 12 months, you are going to divide it by 12 months and take out the profit of.
It's the new law, sir. It's the new law. Then the old basis, you are going to be computing ultimate year and penultimate year. But with the Finance Act 2019 that became effective from 1st of February 2020, you don't show that again.
Okay, sir.
Okay, thank
Thank
you.
you.
Yes, boss. Odafe Susan.
Good evening, sir.
Good evening.
So my question is, for this cessation of business, is it
Yes.
necessary or is it compulsory that we use the commerce council?
No, no, no. It depends on the question. Like this one, they didn't give us that the company commence operation. That means this particular question that we treated, the company has been doing businesses for long.
Okay.
So you don't need to. If the question has the business commence operation, let's say for example, they gave you a question that the business commence operation on 1st of April 2020. and he makes up his account to 30th of September every year. And when you are not looking at the question, you now saw that too. They not told you that the business also cease operation on so and so date. That means, and they now ask you to compute the accessible income for all tax years. That means you need to compute for commencement, and you also need to compute for cessation. I hope you are clear.
Thank you very much. Yes, sir.
Okay.
Thank you, sir.
Samuel Oye.
Okay. All right, thank you, sir. My question is about the cessation of uh, business. Do we need to actually calculate maybe that 6 months after the cessation of the business to know uh, the actual year that we'll use as the year of assessment?
Yes, yes, it is very, very important. It is very, very important. Imagine this question that we did now. Let's say the business is operation 30th of August 2024. 6 months after 30th of August 2024, that is going to be 2025 year of assessment. Do you get it, sir?
Yes, yes, yes.
Okay, thank you. Mr. Joshua.
Good evening, sir.
Good evening, sir.
So concerning what my colleague was asking, you said because of the new Finance Act 2019, so
Yes.
we will not be using we will not be prorating again.
Do you mean by penultimate year and ultimate year? Are you talking of that?
Yes.
No, none like that again. Unless if they give you a question, and then the period falls into the old basis period. It falls into the old provision. Sorry, not old basis period. The old provisions. That's when you'll be doing that. But I don't expect them to be giving you that kind of question actually.
Okay. But
Okay.
question basically talk about the cessation, but do not see where you apply it.
The cessation?
Yes.
Do you mean in the solution that I solved?
Yes, that is the question. They said the business stopped operating so did, but it did not.
Did you see this place that I shaded yellow?
Yes, sir.
Okay. That's when the business ceased operation. It commenced 1st of October 2023 to 30th of April 2024.
Sorry, sir. Good evening, sir.
Hold on.
Yes,
Hold
sir.
on. Mr. Joshua, are you clear?
Yes, sir.
Okay. Please, that person should hold on. Did you raise your hand? Just hold on. Let me attend to others first, please. Precious. Oshuko Precious.
Good evening, sir.
Good evening.
Sir, please, how do you differentiate accounting date from a cessation period? And can you have those two accounts in one question? Exam question.
Yes, you can have the two in an exam question if they want to test you. In fact, there is
Okay.
a question I'm going to work. I'm working on a question that it comprises commencement, change of accounting date, and cessation. But I'm working on it, sir. So I'm going to send it to you. So for
Okay.
you to know if a business should cease operation, it depends on the question. In the question, they will specifically stated that the business cease operation.
Yes, sir.
So you'll be able to know that. But for change of accounting date, they will not tell you that the business change of accounting date. I hope you are clear.
Yes, sir.
They will not tell you that. Okay?
So how you know is the changes in the date, that's the month in operation.
You are very good. Correct. Correct.
Okay.
Thank you.
Okay. Thank you, sir.
Rebecca, go on. After
One of the
Rebecca,
good
okay.
Like
evening,
this
sir.
man.
Good
Good evening,
evening.
sir.
Good evening. Good evening. Go
One
on.
of the questions has been answered, whereby I wanted to find out if that is commencement, accounting, and cessation can be in one question. You have
By
answered
God's
that one.
grace.
Yeah, you have answered that one. Then two, was that one of prorating of for if it were a season August. So we are going to prorate 4/12, right?
No. For cessation, or which one do you want to
No,
prorate?
cessation.
No, you are not prorating anything, no. In
This
this
is going
question,
to
you are
fall
not
the
prorating.
next year. 6 months is going to fall the next year. So what
You are only
happened?
going to prorate. You are only going to prorate if the basis period is more than 12.
Okay, if more than
If the
12, they will
basis
do
period is more than 12 months, that means you
4/12.
need to separate which one falls into
This year.
from first of
Okay.
October to 30th of September, and you now get the remaining dates. That's when you prorate.
Okay, so the actual amount that was there to August will be left that way.
Sure.
All right, thank you, sir. I'm grateful.
Okay.
Thank you.
Because you know when you count the number of months from 1st of October 2023 to 30th of April 2024.
Yes, sir.
From 1st of
Thank
October
you.
2023 to 30th of April 2024 is not up to 6 months. Sorry, it's not up to 12 months.
Thank you, sir.
Good evening, sir.
Hold on,
Thank you.
please. Kehinde Abiose, please. Kehinde, please.
Good evening, sir.
Good evening.
So I want to ask two questions. One,
Okay.
when you were explaining cessation, you said from January to June, the tax will be assessed in the same year. But for July to December, it will be assessed the next year.
Yes.
So this example that we just solved now, the cessation date is April 30th. Is that why we are assessing it in the same year? Because if you count back
6 months. 6 months after 30th of April. 6 months after 30th of April 2024.
Is October. And October
October
it
what?
falls
October
October
what?
assessed.
October what? Yeah.
October 2023.
6 months
2023 now.
after. 6 months after
Oh,
April.
after. Oh, not before.
No, I didn't say before.
Okay,
Auntie Kehinde, you saw before.
Okay, sir.
Please,
Hello, sir. Good evening, sir.
Okay, good evening, Auntie Mubola. I hope
Yes,
that's the correct name. Okay.
yes, sir. Please, sir, I have a network issue, so I didn't know how you get the year for the cessation. So is it that I'll first do my normal basis period before I did the cessation, or I just want you to explain better to me, sir. Thank you, sir.
Please repeat that question, please.
I said I have a network issue, so I don't know. I didn't hear you when you are explaining the cessation. So I was not asking that. Is it after I'm going to when I'm done with the basis period? That's when I'm going to prorate for the cessation. I don't understand, sir. I don't know how you get this working,
Look
sir.
at this question that we did. We did not prorate. We did not prorate because the number of months is not more than 12. It's not up to 12 self. October, November, December, January, February, March, April. This is 7 months. So we don't prorate. And in the question, they specifically gave us the profit. They specifically gave us the profit. You are only going to prorate if the basis period, and by basis period, I'm talking about number of months. You are only going to prorate if that number of months is more than 12 months. If that number of months is more than 12 months, that's when you prorate, or if the business just commence operation. And this question is not a commencement of operation business. So you are not going to prorate in this kind of question. Up is clear, ma.
Okay, sir. But sir, is it that this year of assessment we are giving we should compute for 4 years, and after the 4 years is when the cessation will occur?
No, the question said we should compute for all years. The question said we should compute for all years. And in the question, they specifically said that the business cease operation that due to government policies. That the business cease operation due to government policies. I hope it's clear.
Yes, sir. Thank you, sir. But sir, is my materials in the group, sir? So I can go back, I can understand it.
Sure. You'll see it in the group, and the recorded link will also be shared with us. Are you clear?
Yes, sir. Thank you, sir.
Okay, thank you. So no more questions. So let's quickly look at one major question on change of accounting date. I think that should be the question that Somebody said he tried to
Yes, exactly. That is the question I'm trying to answer. Is exactly that question.
Okay, no wala. Let's save time and let's start. Thank you. I hope we are together. Okay, so also I would like to send a note of warning. We can see that that group, we have like 5 groups for tax, like 5. And basically, when you look at it, the number of people that are always joining class is maybe not up to 200. And each WhatsApp group, if I'm correct, has close to 900 or something. So 900 times 5, or some say 1,000 times 5, that's like 5,000. So a lot of people are just occupying that group. So if you know you are in any group, or you know that you are in more than one group for tax, please don't be caught. If you are caught, they are going to remove you totally from the 2 groups. So please, if you know you are in any one, please don't be caught. They will remove you from the 2 groups, and also for other courses as well. Thank you. So I'm reading this question. Forward Nigeria Limited is a company incorporated in Nigeria for the manufacture of electronic items. The company has been in business for a long time and makes up accounts to June 30 every year. The company decided to change its accounting year end to September 30 every year. The adjusted profit for the following periods are as follows. We have year ended June 30, 2014, 2.7 million. June 30, 2015, 3.3 million. Period ended September 30, 2015, 1.5 million. Year ended September 30, 2016, 4.2 million. Year ended September 30, 2017, 3.6 million. Then you are given the following additional informations. Incomes were overstated as follows. As at June 30, for the year ended June 30, 2015, he said income was overstated by 250,000. September 30, 2016, there was an overstatement also by 280,000. Then expenditure were understated by how much? June 30, 2014, 160,000. Then September 30, 2017, 150,000 naira. A requirement. What is the provisions of the law when a business decides to change its accounting year end? That is the rule A to F. That is what they're asking you there, bonus 5 marks. So you know that rule A to F is for you to just make sure you write them in sequential order. Don't go and write A and write C for B, and go and write B for D, and write D for C. No. Make sure you know them in sequential order. A, this. B, this. A, identify the year that the company fails to make up its account to the normal accounting period. B, 2 subsequent years after. C, prepare accessible profit for the 3 years, assuming the company is still using old accounting date. D, prepare accessible profit for the 3 years, assuming the company is using new accounting date. E, you do the summation of what you get in C and summation of what you get in D. You add it up together. That is E. F is now for you to talk. Tax authority people, they have the right of election. Definitely tax authority people, they are going to select the accessible profit between the two, the one that has the higher accessible income. That is the one they are going to select. B part. What is the practice of the revenue in relation to the provisions of the law? The practice of the revenue in relation to the provision of the law is that they are the ones that have the right of election. So it is expected for them to select the ones that have the higher profit. Also, the law permitted them to compute the 3 years making use of actual year basis. So if they computed the 3 years making use of actual year basis, and the accessible profit is the highest when you compare it with the other 2, then that means they can go with the one that is the highest out of the 3. So the C part, it said we should compute the accessible profit for all relevant years of assessment affected by the change of accounting day rules, taking into consideration the provisions of the law and practice of the revenue. Taking into consideration the provisions of the law and practice of the revenue. What I like about this question is that They did not just give you just adjusted profit that you should go and start computing, right? They gave you, yes, they gave you the adjusted profit. They now gave you additional information. What do you need to do? You need to adjust all this profit before you now start applying the rules. That is the first thing that you need to do. What is the effect of it? When you read it, read that statement in English, interpret it to accounting, or interpret it to taxation, or interpret it to plus or minus. What does it mean when they said income is overstated? My income is 1 million naira in 2015 year of assessment. My income supposed to be 1 million naira, but I now went and wrote 1,250,000 naira. The question now is, what am I doing with this overstatement of profit? If I should overstate my profit, that means I've increased my profit unnecessarily by error. What do I need to do with this overstatement figure? I must minus it. But where am I minusing it from? You must look at the year end. You are going to be doing the adjustment based on which year end. You are going to be doing the adjustment for income overstatement for June 30, 2015 and September 30, 2016. So the figure that you now get, that is going to be the figure that you are now going to be using when you want to start preparing for your change of accounting date. For the other aspect, they said on the expenditure were understated. Let's read it in English and interpret it to financial accounting also. What does it mean when they say that expenditure were understated? My office rent is 3 million naira. Instead of me writing office rent of 3 million naira, I went and wrote office rent of 2 million naira. What is going to be the effect? Instead of me writing 3 million naira as office rent, and I wrote 2 million naira as office rent. What is going to be the effect on my profit? That means I have increased my profit by error. They specifically use those two words to confuse a lot of students in that particular year that they asked this question. And a lot of them, based on the examiner's comments, examiner's report or comment, blah, blah, they said that a lot of students were not able to know the treatment to do for the overstatement and understatement, overstatement of income and understatement of expenditures, that they were unable to know what to do. So what do you do when your expenditure is understated? You are going to minus it also from the profit that was given to you in the question. When you minus it, that means you are going to arrive at a reverse adjusted profit. So the reverse adjusted profit now is now what you are going to be using to do what? To do the computations of your change of accounting date questions. I hope that place is clear. If you have any question, quickly raise up your hand. Or if it is not clear, let me quickly know, so I will clarify it for anybody. But I'm sure with the simple words I've used, it should be clear with for every one of us. But if you know you have any challenges with it, please quickly raise up your hand. We don't have time. 2 minutes. Okay, that means it's clear. That means it's clear. So let's move on to quickly solve this question. Let's move on to quickly solve this question. What is the name of the company? Forward Nigeria Limited. Forward Nigeria Limited. Forward Nigeria Limited. Computation of revised adjusted profit for the relevant years. For the relevant years. So 30 June 2014. June 2015, 30 September 2015, 30 September 2016, and the last one, 30 September 2017. 30 September 2017. Oh no. So the adjusted profit given to us as per the question. This one is 2,700,000. $2,700,000. This one is 3,300,000. The next one is 1,500,000. The next one is 4,200,000. And the last is 3,600,000. 3,600,000. This is the adjusted profit. The adjusted profit. Now, the treatment of this error that were made. What are the treatment of this error that were made? They said incomes were overstated. Income overstated. Which year were the income overstated? The income were overstated for 2015 and September 30, 2016. Please take note. June 30, 2015 and September 30, 2016. What is the effect of this overstatement of profit? That means my profit is not actually 3.3 million. My profit should have been 3,050,000 naira. So what do I do with this adjustment of profit? I'm going to do what? I'm going to minus it from this. From 2015, September 30th of September 2015, I don't have anything. The next one is September 30, 2016. What do I have? 280,000 naira. 280,000 naira. September 30, 2016. The next one is the expenditure. Expenditure were also understated. Expenditure were also understated. Which year were the expenditure understated? June 30, 2014. How much? 160,000 naira. So that means, oh, if I've done my expenditure properly, my profit shouldn't have been 2.7 million. It's supposed to have reduced by 160,000 naira. So please look at that word very well. That word confused a lot of students, that most of them were adding up back. Some were adding up where they are not supposed to add up. September 30, 2017, 150,000 naira. 150,000 naira. So what is left for me to do is now to do the reversed adjusted profit. The reversed adjusted profit. The reversed adjusted profit. So some brackets. Please permit me to just use Microsoft Excel to sum it up as fast as we can. So this is now my revised adjusted profit. Revised adjusted profit. So if I want to start the proration to get the relevant figures for different years of assessment, this is very, very important for me to do. This is very, very important for me to do. So now let's go through the question. And I want to ask somebody, I want you guys to drop it as a chat in the group. Look at this period. Look at this period. The question I wanted to ask is that, what is Rule A? Rule A is the year of assessment that the company faced to make up its accounts to the normal year end. What is that Rule A? What is the figure for Rule A in this question? I would like to see you guys attempt it. Please type your solution in the chat. I will have omitted everyone, but there will be some people that will be distracting us. Okay, somebody said 2016, somebody said 2018, 2016, 2016, 2015, 2015, 2015, 2015, no. Why are you selecting 2015? The person that selected 2018, I want to assume is a typo error. The person that selected 2018, I want to assume it is a typo error. I want to assume it is a typo error. Please didn't get the question. I said, have you looked at the rules? Have you looked at the rules? The rule says that, okay, Rule A, determine the year of assessment in which the company fails to make up its accounts to the normal year end. If you have not read the rule, you cannot understand this that aspect. And if you don't understand the rule, you cannot attempt change of accounting date question. There is no magic you can do. You cannot attempt change of accounting date question if you do not understand the rules. Looking at this question, you are having year ended June 30, 2014. The next one you saw year ended June 30, 2015. The normal accounting year that you should have seen should have been June 30, 2016. Did you see June 30, 2016? No. So immediately you did not see June 30, 2016. So that means the year, Rule A, the year that the company fails to make up its account to the normal year end is what? 2016. The year that the company fails to make up its account to the normal year end is 2016. If you made error with Rule A, if you make any error with Rule A, please, you have automatically made error in Rule B to F. You have made error in Rule B to F. So please take note. Don't make an error with Rule A. Any error with Rule A will transcend into the others. So the year that the company fails to make up its account to the normal year end is what? 2016. 2016. That is the year that the company fails to make up its accounts to the normal year end. So what is the subsequent, 2 subsequent years after? 2 subsequent years after is going to give me 2017 and 2018. 2017 and 2018. Once I've ascertained these 3 periods, what do I need to do now is to look at, okay, what is the basis period of this company? Old accounting date. What is the basis period of this company? New accounting date. Then you start your computations and necessary things that you need to show as per the question. So let's quickly solve this and we'll quickly manage our time. Please just write your question down. If there is going to be time, definitely I will attend to question of you guys. Computation of accessible income for relevant years of assessments. For relevant years of assessment. The first one, let's do for old accounting date. Let's solve for the first one, old accounting date. And looking at the question, what is the date, old accounting date? What is the basis period that the company is using before? If the year end should be June 30, so that means the beginning must have been from 1st of July. So the one that ended June 30, 2014 must have commenced from 1st of July 2013 to June 30, 2014. The one that ended June 30, 2015 must have commenced from 1st of July 2014 to June 30, 2015. So that means the basis period for the old accounting period is from July to June. July to June. So let me write my YOE. My YOE basis period. Definitely there is going to be computations and also accessible income. YOA basis period and accessible income. Don't forget, you are using preceding year basis. You are using preceding year basis. Please take note. You are using preceding year basis. So the first year, 2016. The first year, 2016. What is the basis period of 2016? Making use of preceding year basis. That is going to be from 1st of July 2014 to 30th of June 2015. The second one, let me give a space in case if you need to show any computations. 2017 year of assessment, 1st of July 2015 to 30th of June 2016. The next one, the third one, sorry, not next one, third one, 2018 year of assessment, 1st of July 2016 to 30th of June 2017. Now, don't forget what I used to tell students to do. A simple analysis as workings by the side. So that is going to help you to determine your denominator and numerator. So this one that ended 30th of June 2014 must have commenced from 1st of July 2013 to 30th of June 2014. This other one must be from 1st of July 2014 to 30th of June 2015. This other one from 1st of July 2016, you can see how tricky this question is from the one that we treated last week. 1st of July 2015, sorry, 2015 to what is the year end here? 30th September 2015, 30/9/2015. The next one will now be from 1st of October 2015 to 30th of September 2016. The last one, 1st of October 2016 to 30th of September 2017. 30th of September 2017. Please take note. You are not going to make use of these profits. You are not going to make use of this profit that I shaded in green. You are going to be making use of this adjusted profit that I'm going to shade in blue. This is the profit that you are making use of now. So now the question now is, what is the number of months that I have in all this period? What is the number of months that I have in all this period? This one is 12 months. This one is also 12 months. How many months is this one? July, August, September. 3 months. July, August, September. 3 months. This one, 1st of October 2015, 12 months. This one also 12 months. Then, what is the adjusted profit? 2,540,000 2,540,000. This one is 30,50,000. This one is 1,500,000. 3,920,000. And the last one, 3,450,000. So this analysis is going to help you because I've already predetermined, what is my analysis of the month? So that when I'm doing my proration, when I want to start doing my proration, I don't need to be worrying myself. I've already done my analysis up. So it's just for me to go up and look at it. 1st of July 2014 to 30th of June 2015. Am I doing any computation? No. 1st of July 2014 to 30th of June 2015. This is it here. I'm not going to do any computation because I have number of 12 months, full number 12 months. And the accessible profit, accessible income is 3,050,000 naira. So I'm not doing any workings for that one. 3,050,000 naira. 3,050,000 naira. The next period, 2017, 1st July 2015 to 30th of June 2016. 1st July 2015 to 30th of June 2016. Where will I get it from? Where will I get it from? I'm going to get from 1st of July 2015 to 30th of September 2015 in this period, which is 3 months profit, which is going to give me 1.5 million naira. Let me break it down in the computation side, right? Let me break it down for us in this computation side, okay? I'm going to get the profit of 1/7/2015 to 30/9/2015. 3 months. How much is that adjusted profit? They gave me 1.5 million naira. It's now remaining how many months? I'm getting for 3 months. It's remaining from, based on this, my basis period, is remaining from 1st of October 2015 to 30th of June 2016. 1st of October 2015 to 30th of June 2016. How many months? Let me write it out. 1st 10 2015 to 30 June 2016. Please, you don't need to show this analysis in your exam. You don't need to show this one in your exam. I'm just showing it so that everybody will have a good, fast understanding of what we are doing. So we have gotten from 1st of July 2015 to 30th of September 2015 to be 1.5 million naira. Straight away, we don't need to prorate that one, right? 1,500,000 naira. We have gotten that one. Plus, we now need to prorate from 1st of October 2015 to 30th of June 2016. Where are we going to get it from? We are going to get it in this period. We are going to get it in this period. How many months is this? This is 12 months. You are looking for profit of 9 months in a 12-month profit. So that means in this particular one, we are going to prorate 9 divided by 12 times 3,920,000 naira. 9 divided by 12 times 3,920,000 naira. Okay? Bracket 9 divided by 12 times 3,920,000 naira. I hope I'm correct with what I'm writing. Please let me quickly confirm again. 3,920,000 naira. Good. So what do I need to do? Is to now show my calculations. What I need to do is to show my calculations. Please, I've been begging you and I've been advising you. If you need to use your hand to count the number of months to be sure, please do. This 1st of October 2015 to 30th of June 2016 is 9. If I should go and use 10, the solution has been gotten. So please, if you need to use your hand to get the number of numerator, to get the exact number of denominator, please do. Please do. There is no crime in that. Just make sure that when you are doing it, you are not making noise. 9 times 12, 9 divided by 12 times 3,920,000 naira. It's giving me 2,940,000 naira plus 1.5 million. 4,440,000 naira. So that means this adjusted profit, sorry, the accessible profit here is 4,440,000 naira. 4,440,000 naira. That is the adjusted profit for that second year. So now moving forward, the third year, 2018 year of assessment. 2018 year of assessment. We are looking for the profits from 1st of June 2016 to 30th of June 2017. Where are we going to get it from? Where are we getting it from? 1st of June, July 2016 to 30th of June 2017. Definitely, we are going to get we are going to get 3 months in this first one, 1st of October 2015 to 30th of September 2016. We are going to get 3 months there. What is that 3 months? July 2016 to 30th of September 2016. Please take note. 1st of July 2016 to 30th of September 2016. We are getting it there. 3 months, right? I guess we are going to prorate. Then the second one is going to be from 1st of October 2016 to 30th of June 2017. 30th of June 2017. This one, this 3 months, I'm going to get it from this one that we did here. So I don't need to be going up and down to be showing us. But you can see clearly here, 3 all over 12 times 3,920,000 naira. So we are doing 3 all over 12 times 3,920,000 naira. Plus, we have gotten 3 months. It's remaining October 2016 to 30th of June 2017. How many months is that? That is also 9 months. We are looking for a profit of 9 months. From where? You need to be careful to go and be looking at this your analysis. You can see the question that we treated on Saturday is different. Our denominator and numerator was different from what we are solving today. So don't go and carry the assumption that I told. The one we solved in class was 9 all over 15, if I'm correct. Is it 9 all over 18 or 9 all over 1 all over 18 or thereabout? Don't go and carry that assumption. If you need to show this your analysis for better understanding so that it can help you, please do it in class. Do it at the back of your answer booklet, not on the question paper. At the back of your answer booklet. Please take note so that it's going to help you. This analysis now is making it easy for me. I don't need to go and be cramming and be looking at the question again. So I'm looking for profit from 1st of October 2016 to 30th of June 2017. I'm going to get it here in the one of 3,450,000 naira, which is from 1st of October 2016 to 30th of September 2017, which is a 12 month. So that means I'm prorating 9 divided by 12 times times what is the accessible profit? 3,450,000 naira. 3,450,000 naira. Let me quickly solve it. Three divided by 12 times 3,920,000 naira. We have 980,000 naira. 980,000 naira, right? Plus 9 divided by 12 times 3,450,000 naira. We have 2,587,500 plus 2,587,500. 2,587,500. So let's add it up. Let's add this up plus 980,000 naira. I'm having 3,567,500. 3,567,500. That is what I'm having in my solution. That is what I'm having in my solution. 3,567,500. What do I need to do? Summation. Let me quickly add up. What is the figure for this? So the total for this is 11,057,500 for the old accounting date. Old accounting date. 11,057,500 for the old accounting date. So now let's move on and solve for the new accounting date. Let's move on and solve for the new accounting date. For the new accounting date. Don't forget, you are still solving for 2016, 2017, and 2018 year of assessment. So now, where you have work to do is the ability to determine what is now the new accounting basis period. Sorry, I said accounting. It's not accounting, please. What is now the new basis period for our computation of tax? It's not accounting, please. It's not accounting, I beg. So the new year end is 30th of September. If the new year end is 30th of September, what is going to be the beginning? Definitely the beginning is going to be from 1st of October. I hope you are correct. So I'm going to solve for 2016, 2017, and 2018. So this one is going to be from 1st of October 2014 to 30th of September 2015. This next one, 2017 year of assessment, 1st of September, sorry, 1st of October, not September. 1st of October 2015 to 30th of September 2016. The last year, 2018 year of assessment, 1st of October 2016 to 30th of September 2017. 2017. Definitely, we are going to do some computations also. Let's look at this, our analysis. Sorry, please, I'm going to copy this and take it down so that I don't need to be coming up and down. Yeah, let me put it beside me so that it's going to make this faster. Good. I'm looking for 1st of October 2014 to 30th of September 2015. Where will I get it from? Where will I get it from? You need to exercise caution and patience for this kind of question. Good. I'm going to get from 1st of October 2014 to 30th of June 2015 in this place. So let me show the analysis the way I show it. 1st of October 2014 to 30th of June 2015. How many months do I have from 1st of October 2014 to 30th of June 2016? Sorry, 30th of June 2015. How many months? How many months? October, November, December, January, February, March, April, May, June. That is 9. That is 9 months, right? So I'm looking for profit of 1st of October 2014 to 30th of June 2015. Where will I get it from? I'm going to get it here. What is the number of months in this one? 12 months. So that means I'm looking for 9 all over 12 times 3,350,000 naira in that place. Then it's now remaining from 1st of July 2015 to 30th of September 2015. 1st of July 2015 to 30th of September 2015. The first one, 1st of October 2014 to 30th of June 2015, we said is 9 months, and we are getting it from a profit of 12 months, right? 9 divided by 12 times 3,050,000 naira plus 1.5 million naira, because they specifically gave us the figure for that 3 months, so we don't need to prorate that one. 1.5 million naira. 1.5 million naira. So 9 divided by 12 times 3050,000 plus 1.5 million naira, 3787,500. 3787,500. 3787,500. We have gotten for that first year. We have gotten for the first year of 2016. We have gotten for the first year of 2016. So now let's solve for 2017 year of assessment. From 2017 year of assessment, the year is starting from 1st of October 2015 to 30th of September 2016. This one is a good question. We don't need to prorate. We don't need to prorate this one because this is based on our analysis. This is it here, and this is the adjusted profit. So no need to do what? No need to prorate. 3,920,000. 3,920,000. Then the last one, 1st of October 2016 to 30th of September 2017. We don't need to prorate also. It is 3,450,000. Please permit me. Let me just cancel this 20 spaces that I put. 3,450,000. 3,450,000. So we'll do what? We'll sum it up. This one is giving us 11,157,500. And this one is giving us 11,057,500. What will you advise the tax authority people? Please take note. That advice is very, very important. It's part of the solution. It's part of the rule. It's part of the rule. Okay? Based on the computations above, you can form your English anyhow, please. Based on the computations above, FRS has the right of election, for change of accounting date. They have the right of election for change of accounting date. For change of accounting date, they are the ones that have the right of election for change of accounting date, right? FRS should select the accessible income using the new accounting date that has a higher profit, a higher income of 11,157,500, which is higher, using the new accounting date that has a higher income of 11,500,000 over the old accounting date, which has income of 11,057,500. Is 057,500. Shikina. Nothing will stop them from not giving you your full what is the mark? The full 12 marks for this question. Nothing is going to stop them from giving you full 12 marks from this question. So thank you for joining. If you have any question, now you can go ahead and raise up your hand and ask your questions. Are we together or am I alone? Okay, I'm going to entertain very few questions because we want to jump to another topic this evening. Thank you. So, Precious, is this a new hand or an old hand? Precious and Candy, is this a new hand or an old hand? I didn't need you to know. I didn't need you to know. You can go ahead.
Okay, good evening, sir. Thank you very much for your time. So my question is, can you show your screen up, please? My question is as regard the expedition, the they overstate their income and also they understate their expenditure. So I'm like, why are we like doing it if it was an understated? I was not meant to add it back. So that's where I need clarification on.
Understated. Look at this, sir. You know, I give an analysis. Your office rent is 3 million. What is the meaning of understate? What is the meaning of understate? Understate means that you wrote a lower figure.
Yes.
Your office rent is 3 million naira. That is the correct figure. But you now went and write 2 million naira. What is the effect on your net profit? Can you answer, sir?
I didn't get that, sir, please.
Your office rent is 3 million naira. You now went and wrote 2 million naira as office rent. What is the effect on your profit? What is the effect of that error on your profit?
My profit will be
your profit will go higher.
100.
Yeah,
we'll go higher with 100.
By
Yeah,
error.
with 100.
So when you understate your expenses, that means you have increased your profit by error. And the higher the profit, the higher your tax. Are you getting it, sir? The higher profit, the higher your tax. So I was talking about that overstated and understated, that they specifically mention it in the examiner's comment. Somebody is asking me which year. Please check between 2022, between 2022 and 2023. Between 2022 and 2023. That's when the question.
November 2023 question 2.
Okay. So in this particular question, look at the effect of overstatement of profit. You overstated your income. What is the meaning? You made a income of 3 million naira. You now went and write 4 million naira. That is means you have increased your profit now.
Yes.
When you increase your profit by error, what is going to happen to your net taxable profit? Your taxable profit will also increase also. So that's the reason why we need to carry out those adjustments. That's the reason why we need to carry out those adjustments. I hope it's clear, sir.
Yes, sir. Yes, sir. Thank you, sir. Yes, sir. Thank you, sir.
Okay. Good. So I can see no other questions this night. Do you guys
have
any
a question,
questions?
sir?
Okay. Oh, yeah, go on.
What about if it is expenditure is overstated? How will you go treat it? Let us say vice versa. Income understated, and expenditure overstated. How are we going to treat it? Are we to add it?
Definitely now. If your expenditure is overstated, that means your rent is 3 million naira. You now went and put 5 million naira. That means you have increased your expenses to reduce your profit. You do what? You add it back.
I have a question, sir.
And likewise, the same thing. Do you raise up your hand? Likewise, the same thing. Do you get it, sir?
Yes, sir.
Are you clear, Mr. Innocent?
I have a question, sir.
Okay.
Sorry, no, I didn't understand what you said.
Oh, you said what if your expenses is overstated, right? Mr. Ajayi, please, I'm coming. What if your
Okay, sir.
expenses is
Yes,
overstated? Look at it now.
yes.
The more those things that those people that used to do bad work in accounting so that they can reduce their tax. That's the bad work now. Your rent is 3 million naira. You now went and put 5 million naira as your rent. What is going to be the effect? That means you have reduced your profit. So what do? You add it back. You add that difference, that the overstated figure, the overstated differential. You are going to add it back. I have to get this, sir.
Okay, sir.
Okay, no problem. Mr. Ajayi, please, you can go on with your question.
Yes, sir. Thank you very much, sir. Sir, please, before I proceed with my question, I will love to have the first question back on cessation of business, that the Diamond Enterprise. So we can actually work on it, sir.
What do you want to work on? Okay, you mean the question?
Yes, the question.
Yeah, no, definitely, I will send it.
So, and I want to ask that after we are done with our work, with our calculations,
yes.
And for those of us that are not that good in advising, maybe
you
is
must
it that
advise.
we are not?
You must
Yes.
advise. Go and practice it. Start practicing it now.
And
Start
is it
practicing
that we
that
are not going
advice
to
now.
get our full marks, or maybe we just
I will
have a short
get full marks.
advice?
You must advise them. You must advise them. Please, don't go and do mistake. Oh. That 2 marks or 3 marks, you can do magic. Oh. Please, you must advise them. For change of accounting date, you must advise. You must advise, sir.
Okay, sir. Thank you very much, sir.
Okay, Mr. Joshua. Mr. Joshua, you raise up your hand. Please ask your question. Mr. Joshua, you raise up your hand. Please ask your question. If not, no need of asking any question again. No need of asking any questions again. Where are the people still raising up? Let me quickly look at you guys. Okay. The people now came out. Okay, Omawumi is Coca. Omawumi Coca, please go on.
All right, good evening, sir.
Okay.
So my question is, when you're deducting when you're trying to adjust for the profits, I was thinking you're going to use the preceding year, like you adjusted 250 in June 30th, 15th. So I was thinking you would use it for like 2014, use preceding. I know when we have value for 2015, we assume that value is for
Hold on. Which year are you
taxes.
talking about? Is it this
The
reverse
difference,
adjusted profit?
exactly, those overstated and understated, those
No,
figures.
no. This is how you are going to take it now, please.
Okay.
Okay, ma. Okay. Ojo Samuel.
Yes,
Mr.
sir.
Ojo
Good evening,
Samuel.
sir.
Okay, sir. Go on, sir.
So my question is that why didn't we use 2015 year of assessment? Or is it stated in the question that we should start from 2016?
Bros, did you
Since we
join class
have,
on Saturday?
yes, sir. So, like, if we have 30 June 2014 as so
This is
I'm
your
just kind of
question. You are seeing the way I'm shouting, like Agbero. Look at the rules. Determine the year of assessment in which the company fails to make up is the making use of the year end. And I said it that you are seeing 30th June 2014. The next one you saw 30th June 2015.
Yeah, I
The
understand now,
next
sir.
year should have been 30th of June 2016. So that means the year that they failed to make up their
Yes,
is 2016.
okay, I get it now, sir.
You got
Thank
it
you,
now,
sir.
sir. So you are
Yes,
clear,
sir.
right, Abby?
Yes.
Okay,
Thank you.
Thank you. I can't see the people that are raising hand again. Please, who is the next person?
Yes, sir.
Okay, go on, sir. Go on, sir.
Yes, sir. Thank you for the class. I just wanted to clarify one thing. You were talking about the advice at the end of the question. I didn't get that. Like, who are we advise? Like, are we? What is the advice about? I thought the last one was just letting FIRS choose the higher of the accessible profit. But you were saying something after that about an advice or something. I
Yes,
didn't get
that's the
that.
advice. That's the advice, sir, that you must not write that, okay, FRS, they are the one that have the right of election. So definitely,
Okay.
if I'm the one that is FRS, if I'm FRS, definitely I'm going to select the one that has higher accessible income because I'm interested in higher tax.
All right. Thank you very
Okay.
much.
Okay, no problem. Thank you so much, everyone. And so please let's suspend our question. Please, we'll just take a few notes on capital allowance. And why is it important? Why am I taking it to follow up with basis period? Because your understanding of basis period is very, very important when you are doing capital allowance. Your understanding of determination of basis period is very, very important when you are doing capital allowance. So I don't want you to forget. I want you to remember it. So when we are doing capital allowance, you know that, okay, these are the things that you need to look for when you are doing capital allowance. So for the few minutes, we are going to be looking at notes on capital allowance. And anywhere we stop this evening, and we'll continue from tomorrow by God's grace. We'll continue from tomorrow by God's grace. A minute, please. Yeah. Okay, yeah, please confirm. Can you see my screen? Yeah, good. Thank you so much, Mr. Abiodun. So we are looking at the notes on capital allowance. We are looking at the notes on capital allowance. I hope it's not too big. Okay. You will see that in part of the disallowable expenses that we have, just drop that hand or you can raise it up like that when I'm done. When I'm done, I will attend to you, please. Okay, please. You see that in part of the disallowable expenses, non-allowable expenses that we have in taxation is one major one, which is depreciation. And I used to advise students that, okay, if you are given a question or that you have to adjust profit, if you cannot remember anything, please remember depreciation. Go and look for it, sharp, sharp. Why do they disallow depreciation when it comes to taxation? They disallow depreciation because we are making use of capital allowance. And the main reason why they are disallowing it is there is no uniformity in the rate that many organizations, and the standard, the accounting standard on IAS 16 does not specifically stated that, oh, every company depreciates your motor vehicle 20%, depreciate your building 10%. They don't have it in the accounting standard. So we used to disallow the depreciation of financial accounting, and we make use of capital allowance that we used to compute in taxation. But when you are doing capital allowance in taxation, there are some different types of allowances that you need to take note, and there are some tables that you need to apply when you are computing capital allowance. And the good part of it is that the rates, the tables, the rates to use for initial allowance and for annual allowance, they are going to supply it to you in the exam. They are going to supply it to you in the exam. So what is capital allowance? Capital allowance is a form of relief granted to any company which has incurred QCE, qualifying capital expenditure, for the purpose of trade or business during a basis period in respect of property, plant, and equipment that are in use at the end of the basis period. Capital allowance are granted in place of depreciation, which is usually disallowed for income tax purposes. So we have different types of capital allowance. We have the number one, initial allowance. We have the number two, annual allowance. We have number three, balancing allowance on balancing charge. And we have the fourth one, investment allowance. But with effect from 2023, is it 2023? Is it 2023? Yeah, it's 2023, September 2023. Investment allowance has been abolished. Investment allowance has been abolished. It has a flat rate of 10% and is given on when a company purchases qualifying plant and machinery. That's when they gave it for a company. So let's look at them very fast. What is initial allowance? This is a relief that is granted in the year of assessment in the basis period of which a QC was incurred. In effect, it is an allowance that is granted once in the lifetime of an asset for as long as it is beneficially owned and used by the same owner. If I should buy motor vehicle, and it is a new motor vehicle, I'm going to enjoy initial allowance on that motor vehicle. So it's only given once. It's only given once. The next one is an annual allowance. This one is now like your depreciation. This is granted every year on the residue of qualifying capital expenditure incurred on non-current assets after deducting the initial allowance. Annual allowance is computed on a straight line basis. How do you compute your annual allowance? It's just like doing cost minus the initial allowance that you have enjoyed. What you now have left, that's going to be your the figure for your tax written down value. Tax written down value is another name, is synonymous to carry amount in your financial reporting. Tax written down value. So what do you now do with that tax written down value? Is to divide it by the number of years that you are going to make use of the asset. You are going to divide it by the number of years. But please take note, in a year that the company commenced operation, if the basis period is not up to 12 months, you are going to prorate based on the number of months that you have in the basis period. Why am I saying this? If a company commenced operation on 1st of June 2020 and is making up its account to 30th of September 2020, how many months do you have from 1st of June 2020 to 30th of September 2020? June, July, August, September. That is 4 months. So that means in that year of commencement, the annual allowance figure, you are going to prorate it 4 divided by 12. Please take note, the year that the asset was purchased, don't go and use it to do proration. You are going to be making use of the year that the asset was purchased to do the allocation of the qualifying capital expenditure so that you'll be able to determine which year of assessment will I start computation of this capital allowance. When we are solving a question, we are going to get there. What is balancing charge and balancing allowance? Balancing charge is when you made a profit on sale of PPE, your financial reporting profit. That is balancing charge. That means you have made a profit. And that one is when your sales proceed is higher than your tax written down value. That is when we have balancing charge. Balancing allowance now is synonymous to when you made a loss in the disposal of a PPE in financial reporting. So when you have balancing allowance, it means you can claim that balancing allowance. But when you have a balancing charge, you are going to add it back as part of your profit. Investment allowance. This is an allowance that is granted when a company is an incentive that is granted when a company incurred expenditure on plant and equipment and plant and machinery. It has a flat rate of 10%. But I told us that with effect from September 2023, it has been what? It has been abolished. So the major type of allowances that you need to know, the major ones that you need to know is initial allowance and annual allowance. Yes, you can be given a question where you are going to be doing balancing allowance and balancing charge. You can be given a question where you are going to be doing investment allowance. But please take note, if they give you a question and it's from it is after September 2023, please don't go and compute investment allowance for that question. Don't go and compute investment allowance for that question. Other types of allowances that we have what we call rural investment allowance. And this is an allowance that is given in addition to an initial allowance to a company which has incurred capital expenditure on the provisions of facilities such as electricity, water, third road for the purpose of trade or business, which is located at 20 kilometers away from such facilities provided by the government. We have different types also. We have different types which we are going to be looking at. And this is the rate for it. They are going to give you this rate in the exam. We have another one, export processing zone. This is an allowance that is granted to a company which has incurred expenditure in its qualifying building and plant equipment in an approved manufacturing activity in an export processing zone. The rate granted is 100% capital allowance in any year of assessment. The another types, okay, the definition and types of qualifying capital expenditure. We have the first one. What is qualifying capital expenditure? It means expenditure incurred on assets used for trade or business, which qualifies for capital allowance in a basis period. We now have different types. We have the qualifying building expenditure. We have the qualifying industrial building expenditure. We have the qualifying mining expenditure, qualifying plant expenditure, qualifying plantation expenditure, qualifying research and development expenditure, qualifying agricultural expenditure, qualifying public transportation, qualifying capital expenditure, QCE, and which is incurred on development and acquisition of software or other electronic applications. Please take note, what are the conditions for granting capital allowance? Please take note of this. They can ask you, what are the conditions for granting capital allowance? Capital allowance are granted if the following conditions are satisfied. What are the conditions? The company must have incurred qualifying capital expenditure. There must be proof that this company actually incurred qualifying capital expenditure. Then another one, the claimant must remain the beneficial owner of the asset at the end of the basis period. If I want to claim capital allowance on that asset, it must not be an asset that disposed. It must be an asset that I still have in my company. Then also the asset must be in use only, exclusively, necessarily and reasonably for the purpose of trade or business carried on by the company at the end of its basis period. That means the asset must be used fully by the company. It must be used fully by the company. And also as part of this, it is expected that the company must obtain what we call CAFA certificate, certificate of acceptance of fixed assets, which will be gotten from Ministry of Industries. Is it Industries and Ministry of Industry? So it's expected that before any company can keep capital allowance, you must obtain this CAFA certificate, CAFA certificate. So you have some professionals that used to handle it for you. Note, a period of temporary disuse is ignored for this purpose, provided that the asset is brought into use before the disposal. What is this place talking about? My company, my business period is from 1st of January to 31st of December. And I make use of my qualifying capital expenditure asset I made use of it from January to July, and I dispose it in August. So that means I will enjoy my annual allowance from 1st of January to July. I will enjoy the allowance from 1st of January to July. So these are the rates of the capital allowance. We have the initial allowance rate, annual allowance rate. You don't need to cram this. It will be supplied to you in the exam. It will be supplied to you in the exam. Then I'm going to stop here this evening. Restriction on capital allowance. Restriction on capital allowance. I'm sure most of us, or some of us, if you have gone through the study pack, you'll be seeing when they are doing computation of company income tax, where they are applying restriction of 66 to 3%. What does this mean? Capital allowance to be deducted for an accessible profit of a company in any year are restricted to 66 to 3% of such profits, except for companies that are engaged in agro-allied industry and machinery. Also, capital allowance are also restricted when there is a private use. You are only going to grant only for official use. Then if the basis period is less than 12 months, you are going to restrict amount to calculate, which is going to affect only your annual allowance to the number of months that you have in the basis period, which I think I explained this one, not quite long. So for this capital allowance, the one of 66 to 3%, let's look at it. For example, my accessible income is 1.5 million naira. Then my capital allowance to claim, capital allowance that we claim is like 1.4 million naira. If my accessible income is 1.5 million naira and my capital allowance that I want to claim is 1.4 million naira, this rule means that when you do 2/3, this 66 2/3, when you do 2/3 of your accessible profit, whatever you get, that is going to be the figure that you can only claim on your capital allowance. Tomorrow I'm going to be explaining it for us more, but just a simple brief explanation. My accessible income is 1.5 million naira. Then my capital allowance that claimable is 1.4 million naira. When you do 2/3 of 1.5 million naira, what are you going to have? You are going to have 1 million naira. It means that I cannot claim capital allowance more than 1 million naira. So if my capital allowance that I'm claimable, is higher than this 2/3 of my accessible profit, I can only claim that 2/3 of the accessible profit. But if my capital allowance claimable is like 800,000 naira and the 2/3 of my accessible profit is 1 million naira, then it means I can fully claim my capital allowance of 800,000 naira. So please, this note has been dropped for us in our different groups. So what you need to do for me is for you just go through it and start reading it. So tomorrow we'll treat the remaining part of this note, and we'll treat a question also, and we'll say bye bye to capital allowance. So from there we can start jumping to disallowable and allowable expenses. Once you have the stuff of disallowable and allowable expenses, what you need to now do is to now go to taxation of sole proprietorship, partnership, company income tax. So that's what is there for us to be doing. So thank you guys for being online this evening. A class will still commence, but if you have any question, please let me know. If you have any question, quickly raise up your hand. Let me unmute everybody. If you have any question, please. I can see some hands of some people. I want to assume it's an old hand.
No.
Okay, oh yeah, go on, ask your question.
Sir, please, I have my first question is that in the heading, I want to know whether if it's correct. In the heading, when computing the accessible profit, is it right or wrong for you to put the year, to specify the year of what you are computing?
If you are sure of the year, please put it. If you are sure of the year, please put it.
Okay. Secondly, based on the cessation,
yep.
A question I came across that they talk about the bad debt recover and the bad debt recover that is post cessation, but I was just convinced I couldn't understand what they are trying to say.
Okay, that means when they say bad debt, don't leave that question. Leave that question till when we do allowable and disallowable expenses.
Okay.
We are going to look for a day that we do allowable and disallowable expenses.
Okay. And lastly, it's based on this capital allowance.
Yes.
So based on this theory question you gave us, that is question 18. So I want to know the capital allowance, because in the question they said briefly explain 3 conditions for granting such allowance. I was like difficulty, what are the such allowance? Because according to the scenario, they are talking about the depreciation, that the depreciation of his property, plant and equipment is not allowed. But they are not saying that give the condition for granting such allowance. So is it the same thing as capital allowance?
Yes, now that's capital allowance. Now the conditions that we just finished reading not quite long.
Yeah, that's the thing I want to get. Thank you.
Yes, that's the condition. So thank you for even bringing that. So that means they can ask this thing in your exam. They can ask this thing in your exam. What are the conditions for granting capital allowance? They can ask it in your exam. Please try and know it. Akinwande Faidat.
Good evening, sir.
Good evening, ma'am.
Sir, please, have we done cessation of business before for business period? Have we done it?
We did it this evening. Not quite long. Did you join late?
No, the one we did was change of accounting date.
We did cessation before we do tutorial question of change of accounting dates.
Oh, that means
don't worry, you can watch the video later on.
All right, sir. Thanks, sir.
Okay. Okay, thank you so much. So I can see some comments here. Yeah, I will definitely drop the Excel sheet from us. Then I'll drop the question also. I think I've dropped the question already now. I'll drop the Excel sheet for us. Okay, Mr. Kendi, please go on. Is it a new hand? I was thinking it's a Kendi. Okay, so in the absence of no other questions, so thank you guys for joining this evening. So another class will still commence. So let's give them time and let me give you guys time to rest a little so that you can start preparing for your next class. So see you tomorrow, 7 p.m. And we'll complete capital allowance tomorrow by God's grace. And everybody should now start preparing for the exam. Please, we have started preparing the calculations. Sir, please show the calculation of food accounting date. I did now. I showed the calculation of food accounting date, please. Okay. So thank you guys and enjoy the rest of your evening. Good night.